Okay, well, thank you guys for joining me tonight. So what we're talking about is the CARES Act. You were invited tonight. Some of you are probably assisting small business owners. Some of you are a small business owner, maybe even a nonprofit. So what we're going to be discussing tonight is legislation that was passed by the government, and it's a part of the CARES Act. So when we go over this specifically, that's what we're referring to. It is the CARES Act. Okay. So the CARES Act is the Coronavirus Aid, Relief, and Economic Security Act. They essentially put out $2.2 trillion for the CARES Act when it first came out. Okay, so that's how much funding they put out for the program to help small business owners and also nonprofits. And that bill was passed on March 27th of 2020. And whenever they broke out the CARES Act, what was included in that was called the Ppp Loan, which some of you may be familiar with, the EIDL loan, which was ran by the SBA, Small Business Administration, and the ERC, which is the Employee Retention Credit. Some people know it as the ERTC, Employee Retention Tax Credit, which is what it's also referred to as. Okay. So these were the things that were included within the CARES Act, which is the stimulus package that the government rolled out because of the pandemic that was happening, which was COVID. So now we're going to go into each one specifically of exactly what they are, but the PPP loan, what that stands for is the Paycheck Protection Program. And that is a loan that banks were incentivized to get out to small businesses so that way they can go ahead and keep up with their payroll or keep their employees basically from losing their positions, right? So that's what that was for. That could also be forgivable, which means if they took a PPP loan, they can also have it forgiven. The EIDL loan is the Economic Injury Disaster Loan, and that is directly from the SBA. So what they used was a loan, more of a long-term loan, but they were able to give you a good amount to keep your business going. At the same time, that interest rate was very low. So a very low interest loan, but it was through the SBA for your small business. And then of course the ERC, which was kind of like the one that they didn't really talk about, because if banks were incentivized to utilize the PPP loan, do you think they would talk about the ERC if there was no incentive for them to discuss it? Probably not, right? So PPP loan was pushed out more so than anything else. And then EIDL was what came along right after that. And then ERC. Now, early on, and I'm going to go into like a timeline of the changes that have happened. This is why we get a lot of confusion as far as I don't know a lot about ERC. I think I heard about it in 2020, but I didn't qualify back then. Well, now we're in 2022 and there's been a lot of legislation changes. So we're going to go through that more specifically because you may find out you do qualify. And if you do qualify, is it worth 5 to 10 minutes to do a questionnaire to see how much you can put back into your small business as a tax credit from the government? So that's what it is, right? It's just it's a refund that the government's going to give you back for retaining your employees. So let me go over the timeline as far as exactly how that worked out. And then I think you guys will understand it a little bit more better. And then we'll answer some questions afterwards. Okay. So when the ERS first rolled out, this was March 27th of 2020, business owners could take the PPP loan or ERC, right? But if they didn't know about ERC, odds are they probably weren't going to take it, but they could not take both. Okay, so they could only qualify for one or the other one. They couldn't take both. So let's just say you were a small business during the course of that time and you did take that credit. However, when you took the credit, you took the PPP loan and your CPA said, well, you took the PPP loan, but you're not going to qualify for the ERC because at that point in time, you couldn't do both. And so a lot of people may have got information early on when the pandemic started, but of course, during that time, legislation hadn't changed over again to allow you to receive both. Hopefully that makes sense. So let's go over the evolution of exactly why people are getting confused about ERC and then also PPP and EIDL and how this all relates together. So initially when they first rolled this out, the first change of legislation was in March of 2020. And at this time, business owners, they could accept the Paycheck Protection Program funds, but they wouldn't be eligible to receive the ERC credit. So they weren't eligible for ERC. They could take the PPP, or vice versa. They could take the ERC, but they wouldn't have been able to take the PPP if they did that, vice versa. Fast forward a little bit more time, in December of 2020, that's when some other changes were implemented, with 70% of qualified wages for the Social Security tax. So that was something else they implemented in December of 2020. And that was under the Taxpayer Certainty and Disaster Tax Relief Act of 2020, which was amended. And they extended that employee retention credit under the CARES Act. So they extended it and they modified it all the way through June 30th of 2021. So now we're looking at almost a year into the pandemic in December. And then they make the change where they extend out that PPP, EIDL, and then also the ERC tax credit as well. So while we're all going through the pandemic, they're also going through legislation. They're seeing what's working, what's not. They realize that a lot of people are not taking the ERC tax credit. And the reason why is because they thought that they could only take one or the other, which they were right early on because legislation hadn't changed by then, right? So they may have been confused. So the government said, well, you know, we got to make some changes. So they continue making changes with legislation. So we fast forward a little bit more in January 2021. They made some additional changes where they went over some more specific guidelines. And then in March and April of 2021, these were the biggest changes that most people were looking for. And so once we knew about it, or once the ERC specialists knew about this change, obviously they're getting it out to the small business owners. But if you were getting information from your CPA that maybe wasn't specific to your business, and maybe early on they looked at it, now they're finding out that they could qualify with the recent legislation changes. So within this change, they issued several notices. One of the biggest notices is it's called the ARP, or the American Rescue Plan. That's what most people know it as, ARP. And they included startups and new businesses formed after February 15th of 2020. As long as their revenue was below $1 million, a startup business could also receive a tax credit for starting their business during the pandemic. And they could receive up to $50,000 per quarter only for the last 2 quarters of 2021. So if they started their business during the pandemic, they put in legislation under the American Rescue Plan, which is all a part of the CARES Act together, right? It's just new updates within legislation. And then within that, they also included for startups, but they also included that if you use the PPP loan, now you're also eligible to use the ERC tax credit. So they wanted to make sure that even if you used PPP before, you can now use the employee retention credit that you weren't able to do previously. What they're going to do, though, they're going to look at the amount or when you actually took your PPP credits, and then they're going to subtract that from your tax credit from your ERC, your employee retention credit. So they'll be able to make sure they negate that or calculate it to make sure that they are taking that away from your tax credit, but you're still eligible to receive both. So I thought that was a really good change there that they made during that time. And then November of 2021, the Infrastructure Investment and Jobs Act was something else that they put into the CARES Act. And they signed this into law on November 15th of 2021. And what that did is that ended the availability of the employee retention tax credit in the 4th quarter of 2021. So when we talk about the ERC tax credit, it is from March of 2020 all the way to the end of the 3rd quarter of 2021. That's the timeline that they're looking at. And what they're looking at your income that you made in 2019, and they're comparing it to 2020 to 2019, and then 2021 to 2019, because that would have been pre-pandemic. So they want to see what your income was like for your business, and then they're going to compare 2020 income and 2021 income back to 2019. Okay, so that's what they did for that process. These were all the changes that have happened since they passed the CARES Act in March of 2020, and you can see why there's a lot of confusion on this. So think about it if you were a lawyer and you specialize in specific law, maybe it's contract law, maybe it's finance law, whatever the case may be. The people that work in ERC specifically, that is all they do is tax credits under the CARES Act for the employee retention credit. So they specialize directly in this. That is their sole focus. Oftentimes you have CPAs that work with a business owner and they're working for you to reduce your taxable income. They're not helping you on the payroll side. So this is a payroll tax credit. Oftentimes CPAs are working with you on the other side, which is on your income side. So it's always going to be in your best interest to make sure that you review this information as the business owner and then bring it to the attention of the CPA once you find out that you qualify, so they can help you along that process with any paperwork that they can locate for you to process. Okay. All right. So that's the timeline on all the changes that have happened within the ERC tax credit. And then obviously they want to get the funding out to small business owners and nonprofits. Obviously there's not enough that have actually put in the qualification for it. And another question we often get is who qualifies for this tax credit? And so really there is a lot of small businesses that are going to qualify. They do this nationwide, right? This is a government program nationwide. So you think about businesses that were shut down, you know, maybe they were partially shut down. Maybe that state was all the way shut down, right? There's some states that we work with associates where their whole state was shut down. California being one of those. New York was one of those, right? So there's a lot of different states out there where they were all the way shut down. That would be an instant qualifier because they were fully or partially shut down. The other qualifier is going to be revenue, right? We're looking at the revenue test back from 2019, what your revenue was then to 2020, and then 2021. So there's a revenue test. And then the last one's going to be supply chain issues, right? Depending upon what kind of business you are, construction companies generally going to follow under that supply chain because they are ordering things from overseas. And if there's a supply chain issue, that's normally what they may qualify under, as well as revenue. So those are the three qualifiers, but we're talking about restaurants that would qualify, barber shops, beautician, nail salons. You could be a construction company, schools, government. I mean, even a nonprofit, churches would qualify as well. Anybody that has a W-2 employee under 500 W-2 employees would qualify potentially for this tax credit if they meet one of those three things. So it's going to be revenue, partial or full shutdown, or supply chain issues. And that is the three areas that they look at. Now, the next question we often get is, well, how much are these businesses getting? How much are they receiving, right? They can receive up to $26,000 per W-2 employee. So even if your employee wasn't making $26,000, it doesn't matter because they're looking at up to that amount. That means you can get $10,000 for that W-2 employee. That just means that that's the available credit limit, which is up to $26,000, and it's specific to each year. And I'll go over that more specifically. For 2021, it's $21,000, up to $21,000 per W-2 employee. And then for 2020, it's up to $5,000 per W-2 employee. Now, what we've been seeing working under our business, financial services, and we help out a lot of small businesses, we're seeing an average of about $18,000 per W-2 employee is what we're seeing. So if you're a small business, that's a good indicator of approximately, it's what we're averaging. And so far, most of our businesses are getting back about $250,000 back to their business that they can put right back to work or utilize it for whatever they see fit for their